Alright, in this video we're going to talk about what happens when Premium Pooch Palaces sells and ships out things from their distribution warehouse. How do we deal with that? So here on June 18th, we see that Job 501 sold and shipped from the distribution warehouse. We sold it for $20,000 on account to our customer, Orangeburg Pet Supplies, and that was on sales invoice PPP 715. Now, job number 501 cost us $11,017 to build. Okay, and we're selling it for $20,000. Obviously, we have to make some profit on the job, or we will not stay in business. Okay, so the cost was calculated using FIFO from the finished goods ledger, and we'll take a look at that. Remember, there are two journal entries whenever we sell inventory with the perpetual inventory system. One journal entry for the sale and one for the cost. So for the sale entry for the $20,000, we're going to debit accounts receivable and credit sales. Okay, again, we don't have an accounts receivable T account on our thing, so when we, you're just going to stick it in sales, the $20,000. Okay, the cost part of the journal entry would be a debit to cost of goods sold and a credit to finished goods inventory. So we do have those two T accounts, so we'll make that happen. And of course, that cost will also have to go on a finished goods subsidiary ledger. Okay, so here are our T accounts. So we sold something for $20,000. So here it is. This would be a credit in sales. I just have a sales list here, and you can do the same if you want. It doesn't even have to be in a T account. Okay, I'm mainly interested in these inventory related T accounts and the cost of goods sold. Okay, so that cost of that particular job was $11,017, and so we're crediting finished goods and debiting costs of goods sold for the cost, and for the actual price that we charge the customer, $20,000 is credited to sales and debited to accounts receivable. So these are our main T accounts. Okay, so let's take a look at the subsidiary ledgers. This is our job cost sheet. We need our finished goods ledger. Here it is. Okay, and here's that job right here. Okay, this is for Orangeburg Pet Supplies, the customer. Okay, and the finished goods ledger has a date, a reference number. Then there's this received section. These are the jobs that are coming into, that we received into the distribution warehouse. When they're completed on the factory floor, they come out of the factory floor and they come into the distribution warehouse. So these are what we received. Okay, here's the sold section here. This is what got shipped out of the distribution warehouse. Okay, and then we have a balance section. Now in this case, as of the first of the month, we already had a balance of 100 units at a cost of $110.17 a piece for each doghouse, and we had 100 doghouses, and so that total is $11,017 that's sitting there in the distribution warehouse. So now we actually shipped those 100 out to Orangeburg Pet Supplies. So that has to go in the sold section. So we put in the date. That was January 17th. The reference number was invoice 715. We sold all 100 units and it would have been at that cost, 110.17. So that's 11,017. Since they're shipped out, I no longer have a balance in the distribution warehouse of any of these. So I subtract my balance minus what I sold out, and I now have 0. Okay? Now, if we had more than just this one job in here, then we would have to use FIFO to figure out this cost right here. As it is, this was our only one. Okay? Now, here up in this job, okay, notice that at the end of June, which we'll be talking about in another video, at the end of June, we completed a job and it came into the distribution warehouse. This job cost us $106.43. Okay? But we already had 30 dog houses from a previous job that cost us $107.30 a piece. So this job cost us a little bit less to make each dog house than the previous job. When we go to sell any of these, so if I were to sell, let's say I was going to sell 40 of these dog houses, okay, I got to take the first 30, okay, now here on June the 30th when we received these new 100 units, I now had this separated into 2 lines rather than trying to squeeze it all on one line. We have 30 dog houses at 107 and 100 dog houses at 106, and you got to keep that separate, okay? But together my balance of this 3219 plus this 10,643, together that's 13,862 is my total balance, okay? But I need to keep these two sets separate because they have 2 different balances, okay? So if they didn't have 2 different balances, if these 100 dog houses cost me also $107.30 to build, then I could just have one line over here that says 130 units at $107.30. It'd still say, you know, it would be whatever that total is. Okay, but here I have 30 at 107 and 100 at 106. So when I go to sell 40 units, okay, I'm going to sell 30 of those units at 107.30, which is 32.19 cost, okay? Then the other 10 units will be at 106.43. Okay, which would be 106.43. Now at that point, what balance would be left? Well, I've wiped out all 30 of these here, okay, in FIFO, and I've wiped out 10 of those 100, so I would still have 90 left at 106.43 and whatever that balance is. Okay, so when you go to sell these, you have to use FIFO, so whatever is here first has to be used up before you start in on the next batch. So we learned how to do FIFO back in Accounting 101, and we also reviewed it at the beginning of 102, okay, and we also reviewed it in Accounting 230. So that should be easy, okay, for you to realize how that is done.